Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Calb Group Co. Limited Annual Report. Calb Group Co. Limited is a new energy technology company that offers a wide range of products and services to various markets globally. The company specializes in designing, researching, developing, producing, and selling electric vehicle (EV) batteries and energy storage system (ES) products. The company's product offerings cater to different markets, including the passenger vehicle market, commercial vehicle market, energy storage market, and emerging markets. This indicates that Calb Group Co. Limited is a diversified business entity with multiple revenue streams. In terms of geographical presence, the company operates in mainland China, Europe, Asia, the United States, and internationally, suggesting its global reach and expansion plans. Overall, Calb Group Co. Limited provides electric vehicle batteries and energy storage system products to various industries and markets worldwide. Calb Group Co. Limited market capitalization of $56 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Calb Group Co. Limited holds a significant advantage in their industry. Calb Group Co. Limited trades at a higher price-to-earnings ratio of 61 times and a higher price-to-book ratio of 1.37 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 61% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth are multifaceted and varied across different markets. In terms of production volume, sales of EV batteries, and market demand, the mainland China market has been a significant contributor to revenue growth. The company's leadership in safety performance, driving range, charging efficiency, acceleration performance, and cycle life in passenger vehicles has also driven revenue growth. In addition, the adoption of innovative technologies such as high-performance solid-state battery technology, Lego-type design concept for full coverage of product types, and high-energy cylindrical cells with improved energy density have contributed to revenue growth. The company's global business expansion, efficient carbon management system, strong partnerships with international OEMs, and sustained high growth of leading-edge technology products across sectors have also driven revenue growth. Furthermore, the increase in net sales margin due to cost reduction through technology and management, as well as improved operational efficiency, have contributed to revenue growth. The company's innovative brand power, advanced technologies and products, and high-quality patent portfolio have also played a significant role in driving revenue growth. Overall, these factors have collectively driven revenue growth across different markets and sectors. The company's operating cash flow status is a topic of mixed interpretation. On one hand, the financial statements indicate that the company has negative net current liabilities, page 6, suggesting a lack of sufficient liquidity to meet its short-term obligations. However, other summaries suggest a more positive outlook. According to page 12, the company is generating positive operating cash flow, which implies that it has sufficient funds to cover its expenses and invest in growth opportunities. Additionally, page 13 hints at the possibility of positive operating cash flow, although this is not explicitly stated. Furthermore, page 25 suggests that the company is expected to generate substantial operating cash flow in the future. The inference on page 28 is also supportive of a positive operating cash flow status, based on the company's revenue growth and expansion of business scale. Overall, while there are some conflicting views, the majority of summaries suggest that the company is indeed generating positive operating cash flow. The company's debt level has seen a significant increase over the past year. According to the financial statements, current liabilities have risen by 32.3%, with bond payables increasing from 0 to RMB 11,441 and bank borrowings rising from RMB 18,960,089 to RMB 25,108,122. Total liabilities have also increased by 27.8% and total borrowings by 24.5%. Furthermore, the liability-to-asset ratio has risen from 60.8% to 64%, indicating a substantial increase in net debt. In contrast, interest expenses have decreased slightly. Despite an initial decrease in interest on bank borrowings and bond payables from RMB 1,227,732 to RMB 1,225,334, the total borrowing costs actually increased by RMB 0.3920 over the same period. This slight increase suggests that while the company's debt level has grown significantly, its interest expenses have not kept pace with this growth. The performance of various segments and regions within the industry has been analyzed based on extracted summaries. The results show a strong showing from several key areas. The light commercial vehicle segment demonstrated impressive performance, as did the heavy commercial vehicle segment, particularly in logistics enterprises. Additionally, construction machinery field showed significant growth, especially in specific application scenarios such as loaders. Furthermore, international markets also performed well, with a notable surge in the new energy commercial vehicle sector. Overall, these segments and regions have been identified as performing exceptionally well within the industry. Management is expressing confidence in the company's financial stability despite its rapid growth. They are also reassuring investors that they have sufficient foreign currencies to meet their needs and will take measures to mitigate any potential exchange risks. In terms of strategy, management has announced a significant development with the conditional acquisition of a 10.94% equity interest in Jiangsu Olive Sensors High-Tech Corporation Limited. This move is seen as a strategic step towards expanding the company's presence and capabilities, with all conditions precedent having been fulfilled by November 2025. The company's financial policies have been scrutinized by investors and analysts. One key aspect of this scrutiny is the company's dividend payment history. According to available data, the company has not paid dividends in any given period. This decision may be attributed to various factors, including a focus on reinvesting profits into business growth or maintaining liquidity. In terms of share buybacks, there is no information available to suggest that the company has engaged in this practice. This lack of transparency raises questions about the company's priorities and financial management strategies. That concludes the financial summary for Calb Group Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.